if your bill is $15,000 and you withheld $15,000 in withholdings, and your tax credit is $20,000, you're going to get the $15,000 back. Mm-hmm. So it really is refunding the withholdings you sent to the IRS.
Welcome to The Huddle with ES. On this episode, we have two special guests, Brian Van Camp and Taylor Houston, the CFO of ES Solar.
Exactly. So today we're going to talk about money. Brian, you're our special guest today. Do you want to give us a little background about yourself?
Sure. Thanks for having me. So my name is Brian Van Camp. I'm a CPA. I got my master's degree in taxation, which I'm sad to say is not the world's most exciting degree to go get, but it does do well for us. So I own a CPA firm in Kaysville, Utah. But we file tax returns all over the country in almost all 50 states.
That's awesome. So where did you go to school? Have you always lived here in Utah?
So I was born and raised in Chicago. I came out to Utah about 20 years ago. A little bit of a mutt when it came to my education. I did some time up at BYU, Idaho, and then I finished my finance degree at University of Phoenix and got my master's degree in taxation at Weber State University in Ogden.
What brought you to Utah?
So I served a mission for my church many years ago in Salt Lake City. So
really?
That was my intro back into Utah. I shouldn't say my intro back into Utah. That was just me coming to Utah. Yeah, and we loved it, so stuck around.
That's awesome. Yeah. That's awesome. Well, today the biggest question we want to get to is understanding more about the solar tax credit, right? Our customers hear it from me a lot. People internally hear it from me a lot. I explain it, but we wanted to get it from a professional. So what is the solar tax credit?
It's a residential energy tax credit. That's what you're looking for in your tax softwares and tax forms that you're doing. A tax credit, I think it's also important to make the distinction. A tax credit is really like a payment to the IRS for your tax bill for the current year. So if you think about your W-2, right now you get withholdings that come out of your W-2. That is really it's a prepayment of the tax bill for the current year. The tax credit that comes from doing solar works the exact same way. So essentially, when you go to file your tax returns at the end of the year, you're going to take all of your income and you're going to determine what your tax bill is. And from that, you're going to subtract whatever you withheld from your W-2, and you're also going to subtract this tax credit as well.
So if you don't get to use all that tax credit, can you roll that, obviously, because you're making that payment, if you don't get to utilize all that, can you roll that into future years?
Yeah, you sure can. So you can roll it forward for about 10 years right now. So let's say you have a tax bill of $15,000 and your W-2 had withheld, $15,000, because that's usually what happens. Your W-2 is set up to basically withhold what your bill is every year, right? If you had a tax credit of $20,000, what you're going to find is you're going to get the $15,000 back that was associated with your tax bill, and you're going to have $5,000 left over that's going to carry forward to the next year, and that's going to help reduce your tax bill in the subsequent years. And until you finally use all of the tax credits, you'll use it every single year until it's all the way gone, or until 10 years, whichever comes first, really.
Yeah. The reason we call it a solar tax credit, a lot of people call it that, is because it's obviously related to solar, but there is other things that you can include and capture credits on. Could you touch on that, maybe what some of the additional things that you can capture in that same credit is?
Yeah. So the name again is a residential energy credit, and so when you think about what it takes to consume energy in your home, anything that's related to that would be eligible. And I think when it comes to solar, the big things that we always think about would be things like, if you have to repair a roof, if you've got to do something to make that structure safe enough for an engineer to sign off on putting solar up there, all of those costs related to that are now eligible for the tax credit as well. But other folks might look at other things like geothermal or other things that can create energy production in the home. All of that's eligible too, but specifically within the solar world, we tend to look at it as, the things that kind of play into it are our batteries, the panels itself, all the installation, all the labor. And if you have any roof, kind of repairs that need to go into that comes into play too. Sometimes, and I don't see a lot on residences, but sometimes in the commercial space, people will put up a carport and put the panels on top of the carport as well. If you happen to have a home that doesn't have a garage, some people will do that. Put up the carport, put the panels on top of that. The carport's now eligible for a tax credit also.
So maybe I'm going to ask you a little bit of a difficult question here, but a lot of times we go to a customer's home and we look at their roof and we say, all right, it looks pretty good. It's in good condition, but in the next 5 years, it's probably going to deteriorate and it's probably going to start having issues. And we don't want to put the panels on, then have to charge them later to go rip them off, repair their roof, put them back on. So anytime there's a roof that we think in the next 5-ish years is going to start having issues, we always recommend getting a roof. Is that something that's okay if it's not just dead in the water, it's an absolutely terrible roof? If we recommend, hey, let's include your roof right now, is that something that's okay?
Definitely. Yeah. So anytime, so really what you're looking at on these panels is, these panels are good for 25 years, give or take, right? So if there's anything in the next 25 years that would be necessary to keep those panels there and safe and established on the roof, you're good to go. So yeah, you're fine to take the credit on all of that too.
Awesome. Perfect. Okay. Do you guys have any questions? Does that all make sense to you guys?
Yes, you did touch on this a little bit, but just kind of to repeat, what makes a homeowner eligible to receive these tax credits?
Yeah, so really the only eligibility is you have to own the property. And you have to have a tax bill, right? So if you don't have income or don't have a tax bill, you're going to have nothing to offset the credit against. So the credit is 30% of whatever you spend on all of the stuff that Taylor's talking about, right? All the roof repairs, everything that goes into that, you'll get a credit for 30% of those dollar amounts off of your federal bill. But if you don't have a bill, you're not going to be eligible. Now, if you've got a bill sometime coming in the next 10 years, you'll use it eventually, but that would be the main eligibility is ownership, and you've got to have a tax bill.
Perfect. So that tax credit rolls only into taxes. Say you use it all in there and you have a little extra tax credit left, there's no refund that comes to you with $1.
That's correct. Now people might confuse that a little bit with thinking there is a refund because, again, if you've withheld taxes on your W-2 all year long and you've got a tax credit, you're going to feel like there's a big refund coming.
Oh, yeah.
But if there is anything left over of the specific 30% tax credit that can't be used in that year, you're not going to get that back in the current year. That will roll forward and eventually get used later.
Mm-hmm. That's a very common issue that we come to, maybe setting expectations with the customer on that. But I think that's really important to clarify there is they are most likely going to get a refund because if nothing else changes and they're contributing to that IRS, that is all going to come back if it completely wipes their bill. Are we understanding that correct?
That's correct. If your bill is $15,000 and you withheld $15,000 in withholdings and your tax credit is $20,000, you're going to get the $15,000 back. Mm-hmm. So it really is refunding the withholdings you sent to the IRS on your paycheck all along the year. That's really the refund you're getting back is the withholdings that the IRS doesn't need anymore because they used your tax credit to pay your bill as opposed to all the withholdings along the way.
Right.
Yeah.
So what would be kind of like a timeline to get that tax credit? So you get your solar installed.
Yeah.
I guess we can kind of start with Taylor here as our CFO. What does ES Solar do to guide you to get that tax credit? And then where do you come into play on that?
Sure.
So we try to set the proper expectations with the customer of as far as the timeline goes. Whatever year you're installed in, everything's completed, right? It's got to be completed and installed. So for example, in 2023, that's the year we're currently in. If everything's installed and completed by December 31st, that next tax season, they are eligible to take
2024.
Yep. Okay. So in 2024, usually in the first 3 to 4 months of the year is when you're filing your taxes. That is when you are eligible for that previous year. And so we try to educate our customers, make sure that they understand that that is what to expect. It all depends though on their tax liability, like Brian's touched on. If they don't have very much tax liability in that first year, it is going to roll over for the next 10 years. But if they have a big, large tax liability in that first year, they should be able to capture pretty much the whole thing in that first year.
Yeah, so I guess the only thing I would add to that is that if you're someone that comes into Q1 of a particular year and happens to install in Q1, you're about a year out before you'll get that tax credit. But you're right, if you're a Q4 person kind of late into the year, you're only a few months before that credit comes. And the refunds do come pretty quick with the IRS, between 3 and 4 weeks.
The good thing is we do have a lot of financing programs that actually help with that. Cash customers, yes, you're going to have to wait that whole time, but a lot of our finance companies will actually help by lowering your bill for that first year, expecting you to apply some kind of your refund towards that in the following year. So a lot of times there is financing solutions that we can work with a customer and help them kind of offset that delay.
Perfect. And so once that customer gets their taxes, right? Mm-hmm. They get their taxes at their favorite time of the year. What do they need to do?
Really, it depends. You can go out and have a party. You can go out and buy a new boat or whatever you want to do. But a lot of these financing companies do lower your payment monthly with the expectation that you are going to apply that next year's refund to your tax or to your loan. And so a lot of times we get that kind of confusion. We try to set really good expectations, but that is the expectation of a lot of finance company. If you pay cash for your system, then you're just going to have a chunk of change. Really, anything that you contributed in that year, a lot of that may come back to you in a refund, and you're just going to have that chunk of change that you can use for really anything.
Perfect. Is there anything else that you guys would want to touch on for a homeowner to know about their solar tax credits?
I think maybe just be aware of some of the state things. So Idaho, the way that they work it in Idaho is you'll get to deduct the cost of your solar over the course of 5 years. You're going to take, over 4 years. You're going to take 40% up front and then 3 subsequent years of 20% in the subsequent 3 years. Idaho's tax rate's around 5.8%. So you'll get a benefit out of all of the costs in Idaho. You can take 5.8% of that, and that's going to be the tax benefit you're going to get, but it'll come over the course of 4 years.
Perfect.
Awesome. Any other questions on residential solar tax credits?
I have one, when we say in some of our ads and all that stuff, we say no out-of-pocket cost. Can you explain that to me? I don't know, Taylor?
Yeah, that might be something I could explain a little more. So again, that goes back to some of our financing solutions.
Right.
If a customer pays cash, obviously that's an upfront. They're just paying for that. But there is several finance companies that will allow no down payment, right? You don't have to, day one, you don't have to make a down payment. A lot of them will go 60 to 90 days out before your first payment's due. So really, we go install a solar and they don't have any money that they've put into the system yet. And they ultimately start paying 60 to 90 days after we've actually installed their solar. So that's what we mean by no upfront cost, but they can capture all of that tax credit in that same year. So even though they've started to make those payments, and that's maybe something that Brian can verify here, is they can still take that entire tax credit even though they got a loan for it.
Yeah, that's correct. Yeah.
Thank you.
Sweet. Okay, if there's no other questions on residential, could you maybe touch on some of the commercial credits that are available or tax incentives that are available?
Yeah, and so on the federal side, it's the same as a residence. So you'll still get 30% of whatever the cost is on your federal tax return. It ultimately gets claimed on a business tax return for whatever business might own the property, but it really flows through to yourself personally. So it gets claimed first as a business, and then the benefit really comes to you as the taxpayer. And that's still the same 30%. If you don't have a tax bill, it's going to roll forward for the same 10 years, same concept there. The only difference, I think, would be in the state of Utah. So Utah does have a tax credit for commercial properties of up to 10% of the cost or $50,000 per meter. I do want to emphasize the per meter because we do have some commercial solar customers who are large, manufacturers, big buildings. They've got multiple meters. They can get up to the $50,000 per meter as a tax credit, up to the max of the 10% they spend. Everything else is really quite similar though.
Awesome. So the carports you were talking about before, is that kind of one of those situations where it's a commercial building that's looking to build a carport on the side and they add solar panels on top and try to capture that? Is there anything kind of like the roofs we talked about with residential solar? Is there anything else that's maybe an add or a different nuance that they can maybe capture some of the incentives?
So it really is the exact same. So if there's any repairs to the roof over the next, frankly, 25 years, if you're going to put a carport up, all of those costs, all of those adders come into that, and you're going to be able to take that credit on the whole thing. And maybe the only other part that I would incentivize on the commercial side is to be able to depreciate all of those panels, the carports, all of those costs. A commercial person can depreciate it, which means they can deduct it against their current year income. And that adds an additional benefit that, frankly, a lot of the residential folks aren't currently utilizing.
Right. Awesome. Okay, any other questions on commercial?
I'm learning so much right now. I don't know too much about taxes, but I feel like I'm getting a little bit of a wrap.
You're starting to think it's fun now, don't you?
Yeah. Fun is a different word, but interesting, yes.
I've helped Josie with her accounting homework, and I don't think she thinks accounting's fun.
I can say I don't want your guys' job, but I'm very thankful that you do it.
I got to start thinking about prepping now.
I know.
Because it's like the end of the year, so
it's coming.
Yeah, it's coming.
Which I guess leads into kind of a final question, final little recap. What does a customer do to prepare to get that tax credit?
So really the main thing that they need, and I would recommend, try to find a CPA to help you on that year that you get the tax credit. But if you want to use a TurboTax or Tax Act, those softwares are really they're built around the consumer that needs to be able to have an ability to do this tax credit as well. During the interview process, it's going to ask you if you did any kind of residential energy enhancements. And if you did, you'll click yes. And the main question it's going to ask is, when did you do it? What was the date on the invoice? And how much did you spend? And as long as you've got those two numbers from the invoice that ES Solar is going to send to you, you're going to be well set to be able to get the credit. And then the software will take care of the rest behind the scenes.
Perfect.
Yeah. So that's all we provide at ES Solar to the customer. All you need is your invoice. It's going to have the total on the bottom and the date that it was invoiced, which is the date of installation. So those two things are the main points you're going to need. It's fairly simple to actually fill everything out. They just ask those couple of questions and you can get all of that from the invoice we provide.
So I think that's all for today. Thank you again so much, Brian, and thank you, Taylor, for helping us understand more about our solar tax credits.
For more information, you want to contact Brian at Linked Accounting or contact ES Solar at essolar.com.
Great, thank you.
Thanks.